Please, everybody, make sure to vote. I'm giving exactly 3-4 more minutes because I know that some other people are going to join in the meanwhile. It's every time it is the same thing. We have like people joining 5 to 10 minutes late, so I want to make sure we can cover what people want to the best of our ability. Before we continue, I would like to thank all the new subscribers we have. We appreciate it. If you have any questions, you can ask us always on Skype with handle ZNS Global, or you can send us an email at support@znsglobal.com. You should be able to find all these emails on the website. So again, thanks for everybody who has been supporting us, that has shown interest in our service, and all that good stuff. I'll be coming shortly. Waiting for everybody to vote, waiting for a bit more people to join. We have only 21 people online right now. I think some more are going to come. So I'm waiting for everybody to join. I'm just off for a smoke, and when I'm back, we will be starting. Okay, guys, I'm back from killing myself, so we shall continue. We shall start. Sorry. Thanks to everybody. Okay, looks like we will be starting with the euro dollar. Seems like it is a clear winner right now, so I'm going to just go show the results to everybody. We're going to start with the euro dollar. We are then going to move to the euro yen because the dollar franc is a bit more boring, although like there is literally no change from last week. So I would rather cover the euro yen first, and then we're going to move to the dollar Swissy. I'm closing the poll. Be able to see my screen right about now. Yes. So yeah, hello guys. Thank you for joining. Before we continue, I would like to thank everybody who has subscribed. We also would like to say that this is for educational purposes. We are not licensed investment advisors. What we offer is a strategy that has been profitable in the markets and that can potentially continue to be profitable in the market. Of course, past performance is not indicative of future performance. Trade at your own risk. We are not liable for any losses you might take. Now, uh, after saying this, we can now move to what is really important, which is taking a look at what the markets have done. I would like to first ask if everybody has read the evening briefing for Friday and if everybody has read the weekly recap. I would like to know if you guys have familiarized yourself with our analysis on what has happened past week. Sorry, this is 5. Yeah, Dennis, I know what you mean, but you know what I mean as well. I wish he had a magical eyeball, and I always knew what was going to happen, but unfortunately, magical powers are not something that I have. Hopefully, we will always be profitable, but nobody can guarantee that. Entertainment purposes only. Well, I would rather think of it as educational purposes. Anyways, guys, okay, I didn't get much of a question. If you guys have read our analysis and so on that we posted over the weekend, I'm going to start with this. Euro dollar has completed a rather clear 5-wave advance. Sorry, no, this is here, and this here is obviously wave 3. Now, I just want to check something. Want to make sure everybody's here. Okay, so now we have outlined that we have a 5-wave either completed or nearing completion. Now I'm going to get into a lot more detail because I believe it's important to actually understand that we have the potential to pull quite a bit higher before we see any sort of a decent correction. Now this wave 3 was 370 pips, so wave 5 can extend if you can extend all the way 350 370 pips, which means that we can extend easily to 1.36s before we see a larger pullback. Would I expect it? Maybe not, maybe not. However, what I do know is that we are holding an extension long on the micro time frame. Now, how do we know that this is the extension long? First, traded several times. Second, now this is the extension long that we're holding. Why? Because first we had a halfway back long hold here. This is the first halfway back long on the really micro time frame after this traded here that held. This halfway back long started blowing through targets and gave us an extension long on Friday. This extension long is this one. This extension long went pretty much to targets. Actually, what's going on? Yeah, well, we haven't actually filled the targets. You can make a case that they were filled. It really depends on how conservative or how non-conservative you are. However, we are retrading the same anchor new high. So this same anchor new high, this extension long, which is a valid level of support, it is a confirmed level of support because this halfway back long traded and this thing already traded once. So if we are trading this extension long, which we are, we have targets above us as the 1.35s. Now, this is on the very micro time frame. I am looking for further upside. And what of you know, maybe all of you know, that we have been talking about the 1.348 level for a while. We initially said that we will be shorting this level. However, several things made us change our mind, and we are going to quickly cover those. for starters, I would like to say that until at least this extension fails, I would not be looking to go short the euro dollar. Now, let's move to the daily time frame. Now, I'm going to be repeating myself quite a lot now because we have already covered this, but uh, just for other people who haven't seen this, we have a clear tree drive pattern. Since 2008, we have had the upside and the downside in a clear tree drive pattern on the daily time frame. We also are in a larger Elliott wave triangle. Now, this tree drive pattern was nearly perfect. It was perfectly time symmetric, with the exception that it was not so perfect in symmetry when it comes to price. Now, for those of you that are familiar with the tree drive patterns, they know that they have to be price and time symmetric. In this case, we had, this was leg one, and tree drive patterns have well, two targets once they trade. It is the 102.72 extension and the 1618 extension. We would have expected one of these two levels to hold. Obviously, we held the latter one in 2010, which was 1618 extension. Now here is where this tree drive pattern was a little bit non-perfect, imperfect. The thing is that when you see that this second leg of this tree drive pattern was this 1618 extension, you would have expected that the last and third leg would have been at the 1.618 extension. However, instead we stopped at the 1272 extension, and that was pretty much the high since 2011. Interestingly, the downside from 2011 to mid of 2012 was in an exactly perfect tree drive pattern, both in time and price. We had leg one. This here was leg one. I'm just going to like do this here, and I'm going to do this here, and this is the third leg. Leg one, when you take the Fibonacci of wall to wall, high to wall of this leg one, and you get the 1.272 extension, you can see that the second leg of this tree drive pattern was exactly the 1272 extension. This led to a small correction, and after this small correction, again we get the second leg with price projection at the 1.272 because that is the previous leg we held, and this gave us our third leg and wall for 2012. I mean, there is like 100 pips, like 100 pip miss here, but I mean it's a 3000 pip range, and you know, in a 3000 pip range you cannot be like, you cannot expect perfection. I would say that this was a perfect tree drive pattern to the downside, with all the legs being the 1272 extension. Now, let's move to what's going on now. Now we are identifying, well, we are expecting current price movement to give us, to take us to the triangle top on the daily time frame on the euro dollar in a tree drive pattern. Why? Because so far all the characteristics of an emerging tree drive are apparent. Now, what do we have? Now I'm going to remove some of these Fibonacci's just to make the chart a little bit more visible for everybody. Now we take this leg one. We draw a Fibonacci like that. We draw a Fibonacci like that, and this is our leg one. We know this is our leg one because there's nothing else that can be our leg one. And we get the two extensions, the 1.272 extension, the 1.618 extension. Now, the 1.272 extension is just here. So this is actually a valid entry to short from the perspective. This is a halfway back short from 2011 high to 2012 low, and it is also, well, it is also this three drive pattern leg. However, and this is where things get a bit tricky. If we are repeating 2010, and I personally think we are repeating 2010, I would expect the same thing to occur and for us to go straight to the 1618 extension. I would expect the same thing to occur as 2010. That means that this short over here, the 1.272, which is also last year highs, also halfway back short and whatever, I would expect us to go straight through it and to see the 1.618 extension at the 1.38 mark. Now, 1.386 mark, if I draw it perfectly. The interesting part, and that is what actually makes me even, how can I say, like, even more convinced that this is the scenario that we are looking at, is if we assume that this, of course, there is a lot of guessing here, but at this point, this is our best guess, and we cannot assume anything else. Now, if we assume that we are going straight to 1.386, we take the second leg. This is like the wall and the high of the second leg. If it occurs at the 1.386 mark, we get the 1.272 extension, and we are exactly at the triangle top. And we are going to have the same, absolutely same repetition, extremely fractal repetition of 2010. We are going to have leg 2 at the 1.618 extension, and leg 3 of this 3-drive pattern, which is the short signal at the 1.272 extension, which also aligns with this freaking huge daily triangle. Now, another thing that further reaffirms my view when it comes to this is, now for those of you that can see, we have a very small 3-drive pattern on the hourly time frame. Well, it's not really small. It is a huge range. If you think about it, it's like 800 pip range. And we have had the rally from the 1.265s to the current highs in a pretty clear 3-drive pattern. Now, we would have expected this high here, which should have been the first leg of this 3-drive pattern, the third leg of this 3-drive pattern, to is it that bad, Doctor? I'm very sorry. If that makes you feel better, if that makes you feel better, Alexander doesn't have any accent. I hope I'm understandable, however. I hope everybody can understand me. Now, anyways, thank you for thank you for making me laugh. Anyways, I would have expected now, as I was saying, now, okay. Let me remove the drag extension and let me just draw these tips over here. We take the tip from high to low. We place the extensions. Give me a second, guys. I have to admit I'm getting a bit tired because I have repeated this several times, and I hope you guys understand that it is getting a bit tiresome repeating myself. So anyways, as I was saying, now we would have expected now to see a very strong participation at the third leg of this 3-drive pattern, because it is at the 1.272 extension, like over here-ish, would have expected a strong participation of shorts, but we're not getting it. Now, that means to me that I am expecting the third leg of this 3-drive pattern, because this is the first leg, this here is the second leg, and this is currently the third leg. I am expecting this third leg to give us an extended AB equals CD, and the third leg to extend to the 1618 extension of the second leg, and that would give us this wave 5 to conclude just under the 1.36s, and just over here would we expect a valid short signal. Now, this is observation. Now, for those of you that are familiar with Gartley patterns, you should know that they are based on the so-called potential reversal zones. It is called a potential reversal zone because you have to have an observation of participation. Now, right now, I'm not observing a lot of participation on the shorts. As a matter of fact, quite the opposite. I'm observing very little participation. This makes me think that we have a lot more upside. Now, a lot more upside means 100 pips higher. before we see a large tree drive correction. So what I'm looking at, based on everything I have said, is a move over here in an extended, in an extended, fifth wave, and then a move like that or something like that. You know, like I don't know exactly how it's going to occur. Obviously, I cannot know. So I would say that this is what I would be looking at before we see a larger correction. That is what I would be looking at. Now, this is all based on observation. The shorts are valid and the longs are valid. Now, this is a concept that a lot of new traders cannot guess, cannot understand, they cannot get it. Yes, right now we have valid shorts and we have valid longs. I am long from last week's lows, pretty much. I'm long from the 1.3 from the 1.3275s, and I will remain long while at least this extension does not fail. If this extension fails, now I am seeing the potential for this tree drive pattern to have completed and to see a larger pullback. But at the current juncture, I cannot make a case for shorts. We need to see confirmation of shorts. This is not enough for us to confirm short participation. As a matter of fact, what I'm thinking is the lack of participation is just confirming this larger Elliott wave triangle. Because within a range, and we had this last week in a much smaller time frame and in a much smaller scenario, but last week we said it and we've been talking about this since this triangle has been developing. Within a range like this, there is only one safe entry, and that is the long entry at the bottom of the range, because there are no shorts within this range. There are only longs, and the only safe entry is the bottom of the range. So if you look at the daily chart on the euro dollar, and if you consider the lack of participation, because on a major short level like the one that we're seeing right now, usually what you would have seen is 100 pips lower by now, because this is a very major level. Of course, something could happen. We could see a catalyst that's going to drive us, but for now we haven't seen it. So the way I'm viewing this lack of participation on the short side is just as a confirmation of this very large daily triangle, and this very large daily triangle is just confirming that the only safe long entry as is at the bottom of the range at the halfway back, at the all-time halfway back long. Now this all-time halfway back long is the 50% measure move long from all-time lows to all-time highs, and you can see that we are rejecting exactly from that level. We are rejecting exactly from that level. Now, I would expect, that being said, I would expect one more leg to the downside as I have drawn on this chart. I don't think this triangle is completing, although I know that some Elliotticians that are much better than I am with Elliott waves have been arguing that there is the potential for this triangle to be completed. However, I think we will have one more test of lows. That is also based on my fundamental perspective, that I think that the Eurozone is not through the worst yet, so I'm thinking we will see a move to the 1.42s this year, and we will see then a sharp move to the downside. So I think this range has a good 2-3 years more until it finally plays out and completes. So to summarize everything I've said, and I have said quite a lot, we have a 5-wave up. This 5-wave up can extend all the way to the 1.36s before reversing lower. We have a level of short participation and we have a level of long participation. So right now what you're seeing is, I wouldn't say a battle over the trend, but we're seeing two sides which have to validate each other. I'm keeping my longs for all the reasons that I have outlined, and everybody who has forgotten them will be able to check them afterwards, because we're going to upload the webinar on the site. That being said, until this micro long fails, I am not looking to get short the euro dollar. Now, what I want to outline, however, on the micro time frame, is that we are holding all the way halfway back short. So we are potentially holding shorts from the top, which could turn out to be a pretty major thing. We need more information. Keep in mind that it's Monday. Mondays are not days in which you have to get overly aggressive with trading. They are a low participation day. They are mainly a day for observing. Okay, now this is for the euro dollar. If anybody has any questions, feel free to ask them now. Any questions on the euro dollar, guys? Again, unlike fundamentalists, and that is something very important, I think that everybody who's here understands this concept very well. Yeah, we hold off for now, exactly. Unlike fundamentalists, we do not jump on trades. Like, we need a confirmation of bias. Fundamental traders, like, based on their fundamentals, they determine their bias and they decide what they want to do at the current price level. We need to confirm our bias. At the current juncture, we are in longs until they fail. We are in longs until they fail. One important thing that Alexander actually asked me to cover uh, today earlier is, and it is actually my mistake for not covering it. And it is a relatively important point. Now, first is this thing. We had this drag extension that we have been talking about for ages, go to target last week, and we also have all the way halfway back long that traded over here, all the way halfway back long, go to target. We had two longs hit targets. So usually that means that we would pull all the way halfway back long to the 1.307s. However, we need to confirm this by failing this extension long in the micro time frame. Until we fail the extension long in the micro time frame, we cannot confirm valid level of resistance. I hope this makes sense. Yes, I'm going to check the question. Give me a second. I just want to get my chart. Although price made new highs on the Friday, it overlapped a lot. Isn't this an indication of the move failing for now? No, not at all. Now, why would that be an indication of the move failing? Now, if that was an indication of the move failing, then last week you would have been shorting everything over here. Is that not right? You cannot assume that price is failing as long as it is holding valid level of support. We need to break the valid level of support in order to confirm that shorts are starting to win. Last week, what we had, and the week before that, was shorts. Shorts go short at the highs, push price all the way down where longs got their fills. And all the shorts that were shorting the highs got rolled over last week. So potentially we could just see the same thing happen here, because until we are holding this very valid extension that has traded before, you cannot make a case that longs are not valid. Now, I understand what you mean. Yes, there is certainly some resistance, but Dr. Z, and I hope I'm saying your name right, think about it this way. Now, this is last year's high, right? This is also halfway back short. If you draw all the way halfway back short from here to here, if you draw all the way halfway back short from 2011 highs to 2012 lows, you can see that we are trading a halfway back short. Now, when you trade such a major level, wouldn't you expect a bit more participation? I would have expected personally to see 100 pips lower the moment that we traded that level. And this is actually what gives me doubt, because this is a very valid level of resistance, but this valid level of resistance is not getting the participation it deserves. So what I'm thinking is that we are going to see, because we started with a low in risk on Friday this month, the 4th. The 4th of January was the low in risk. In January, I'm thinking that we are going to end this Friday with a new high in risk, which is going to give us a bearish signal into February. For now, longer value until they fail. Does this make sense? We just cannot validate we cannot validate shorts until they actually show some close, if I can put it like that. We need shorts to tell us back off. You know, that's what we need to see, and they're not telling us that yet. Well, the thing about Elliott waves is that you cannot know until it has been completed, right? And that is actually the really great thing about the way our system works, is that very often, thanks to this system, we're able to validate certain Elliott wave counts before they occur. So right now, I am expecting an extended fifth wave. I am expecting an extended fifth wave. So let's see. I mean, I can be wrong, but while we are above the 1.341s, I cannot make a case for long sailing. And to be quite frank, I'm even considering trailing my stops to the 1.341, but I'm going to keep them here, which is all the way halfway back short. Now, any other questions? I hope I was as clear as possible. I realize that I talk a bit fast, and I'm very passionate about markets and so on. I'm guessing most of the questions might be concerned with the strategy and so on, and we will be covering this over this weekend very thoroughly. We are going to cover how this strategy works. Mr. Ree is typing. Mr. Ree, feel free to ask your question. Please do. I'm noticing then we are along the dollar yen, getting a very good bid. Same goes for the dollar franc and the euro yen, which I'm also long. I'm waiting for Mr. E to ask his question because I see him typing. Mr. E, please feel free to ask your question. Exactly, and okay, Mr. E. One thing I want to point out from a point of that is actually thank you for saying that, because I want to point something concerning traditional technical analysis. Now, in traditional technical analysis, forget Elliott waves, forget jazz. It is very good jazz, by the way. In traditional Elliott wave, in traditional technical analysis, this is a symmetrical triangle. This symmetrical triangle has a price target, which is 2/3 of the move it was led by to. So if we take this move over here, even if you don't take this whole move, even if you take this move over here, just the wave 3, this is 370 pips. So it's in traditional technical analysis, you would expect at least 200 pips higher upon the break of this symmetrical triangle, which again gives you the 1.36s. So what could happen, and why I'm keeping my stop loss here, is in traditional technical analysis, we retest the broken triangle before we go higher. So thank you, Mr. E. Very good point. Thank you for saying it. I hope that makes sense. I am a very big fan of patterns. People that have been following me for a while know that I trade mostly on patterns. Mostly on patterns. Well, of course, this strategy is my guidelines to everything, but I choose to set up twice as much when I see a valid pattern. Now I'm going to move to the euro yen because it's starting to go nuts. This is the euro yen, guys. You can see our awkward wonk entry. I went wonk yesterday at the gap fill. I booked 20-30 pips. To be quite frank, I lost like 30 pips on this long. I didn't make it perfectly riskless. Like I lost like net 30 pips in the morning. I bought here, took 20, got stopped at break even, and now I rebought. I have been rebuying simply because we are holding the next daily wonk. Now this is the euro yen, by the way. Now why am I doing this? I have been talking for a while about the cyclical nature of the euro yen lately, of the yen crosses lately. We have been seeing a marginal new high on Mondays and then a correction into the middle of the week before continuing higher. Now this is the important difference. This is the important difference here. The important difference here is that for the first time since like for the first time this month actually, Not only did we go to targets straight away from the level we posted the entry, but we started blowing through targets. Now, why is this important? It is important because in prior situations, the euro yen usually would start going down and correct before it hit its target, its larger target. In this case, not only did we go straight to the target, we even broke above it. So, of course, there is always a possibility that we will pull back to the 118s. However, because we started to blow through the targets of this wonk, we have a new valid daily extension wonk, which is drawn from the 120.75 top to the current high. And you can see that we are holding the next daily wonk. This is the next daily wonk. Before we break this daily wonk, and this is very important, before we break this daily wonk, we cannot expect any further downside. I hope everybody understands this because I believe this is fairly important. Now, Steven, who is a very good trader and he knows this strategy very well, he's a mate of us, mate of ours, and so on. He pointed out earlier that we are holding this halfway back short, and we continue to be holding this halfway back short. Confirmation of this support level will come when we break this halfway back short. Personally, I do not consider this halfway back short to be a valid entry level, simply because we are within the next daily long. So I would only look to short a full halfway back short when we break this daily long setup. This daily long setup again, and I want to point it out, is this setup. Now, there are several other things that make me believe that we are going to be going straight up in the yen crosses. I'm going to go again with the euro yen. Now, on the euro yen, I don't know how familiar you guys are with Gartley patterns. We have a bearish shark under development. This bearish shark is drawn like that. And the reason why I particularly like it, for those of you that know, bearish sharks are the so-called emerging 5-0s. Now, what is an emerging 5-0? I hope I'm not speaking Chinese. Emerging 5-0 is... Okay, let me remove this extension log. Okay. I wish there was a way like with MetaTrader to just hold certain, to hide certain labels. Because I don't want to remove my text. Now, this is the bearish chart that we are having, we are developing. Now, why do I like this? And I want everybody, I would like everybody to understand. Okay, I'm going to remove this anyways. I want everybody to understand why I'm saying this. We have not had a full halfway back wonk retracement on the yen crosses for ages. A shark is an emerging 5-0. What is an emerging 5-0? It is a halfway back wonk, guys. It is halfway back wonk. So what would happen if the shark trades at the 1.272 mark? You would expect a very strong rejection over there and the pull all the way halfway back wonk before further upside. This pattern, then, you know, like what becomes a 5-0 is this thing. This is called a 5-0. This is called a 5-0. And you have your wonk entry over here. And that is why I like it so much, because the way this Gartley is working out, it is pointing to us further upside, and from that further upside, it is pointing to us a full halfway back wonk, which everybody is expecting. Everybody is expecting the yen to retrace very deeply sooner or later, and I am expecting it obviously as well. However, I think this retracement still has a little bit more time until it comes. So I think we have another 500 pips higher before we see this full halfway back wonk retracement. And I think that this bearish shark, if you guys can notice, is perfectly aligning to occur within the next couple of days, pretty much, with the extent of this move. Now, Another thing I want to point out, and this is actually my confirmation of this of this berry shark. Can everybody see this? Can everybody see this Fibonacci I've drawn? Okay guys, this Fibonacci drawn is a awkward, very awkward, halfway back short we held on the Euro Yen in 2009. 2009. We reached target of this halfway back short in 2011, and we went slightly below those targets, 500 pips before this target. Now this is a confirmed level of resistance. If we take this halfway back short, from over here to here, it gives us a 50% entry over here. Actually, I could potentially be mistaken. Give me a second. I could potentially have given you a wrong level to go short. It could have been actually the 1.225 because I remember clearly these two aligned very nicely. No, actually, yeah, it is the 1.27. So we will see, but this is the potential reversal zone, guys. And that is especially why I like it, because this move looks very sharp. This is the 50% over here, the 1.255 mark. And the berry shark completion level is at the 1.26.8 mark. Now keep in mind this is a huge range, so you shouldn't be particularly surprised by this 100 pip difference. So I really like it because it aligns with a very important short that he has traded before. Does this make sense, guys? Does this make sense? Give me a second, guys. Sorry. Let me check. Where are you guys? Okay. Uh, I hope this makes sense. Euro Aussie, I'm going to cover it in a second. I want to make sure everybody gets my point on the EJ. On EJ, does everybody understand why I am looking for 500 pips, 3 to 500 pips higher in yen crosses, specifically Euro yen? I just want to make sure everybody gets it. I'm noticing that the Aussie dollar is going into my long entry, so perhaps I should cover this, although judging by it I might just get trolled, we'll see. Does everybody get the point on the Euro yen, guys? Okay guys, so yeah, that is exactly why I expect more upside, and again, you know, I was speaking about these cycles and blah 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 on the yen. I think this year, this week we are breaking the cycle and we are going to post a high that is going to be extremely major this week. We'll see. Now, I'm going to move to the dollar franc because it was the next thing of interest that you guys wanted. It is the next thing of interest. The dollar franc, we went long live last week on Friday. The reason for going long was this neckline test of the inverted head and shoulders and this full 50% long. Now these longs have now went free, as this is an ambush long. This is a long that comes after breaking a halfway back short, drawn from here to here, gives you a full halfway back long. Now everybody who has taken this trade, I urge you, take half of the position to become riskless. Take half of the position to become riskless. You do not want to risk more than you have to. There's really, I don't know what I should cover when it comes to the dollar franc, because it is so clearly bullish to me that I mean, I don't. We have a wide inverted head and shoulders. We have an ambush long. We got free on our longs, so I really don't see any need to cover anything further. Of course, I am. I am long the euro. I'm long the euro dollar and I'm long the dollar franc. And you're going to ask the question, why does it works? It is because the euro franc is moving. It is because the euro franc is moving. The only reason the dollar franc was the inverted of the euro dollar is because the euro franc was at 1.2 for 1 year. Yeah, it was doing the opposite when the euro franc wasn't moving, because the euro franc was pegged to the 1.2, and when the euro franc is not moving, it is normal that the dollar franc is going to do the opposite. But now we have the euro franc moving, so now it is not a matter of them being the opposite. Actually, it is a matter of which one is moving more. So if the euro franc is moving a lot and the euro dollar does not move as much or stays in a range, you would expect upside in the dollar franc, and that is what has occurred. Now look at last week. Last week, man, we had the dollar franc go to the upside in the last hour of trading with euro dollar staying at highs. That was because the euro dollar was within a range and the euro franc moved 100, like not 100, but 50 pips higher. Do you understand the difference in how the correlations work now? Did we break them? Yeah, we broke halfway back short on the euro yen. Thank you very much for enjoying my long. Anyways, we have a very micro inverted head and shoulder on the dollar franc, which is going to target the 035s pretty much. The 035s. SK, back to the question. No, right now they are not the opposite of each other because the euro franc is moving. If the euro franc stays at the same level, they would be the opposite of each other. But when the euro franc is moving, they are not the opposite of each other. Do you understand what I'm saying? I can actually give you a price overlay. Just check this. I'm just gonna move to a daily time frame and show you like how the correlation has broken. And that is how we identified that the franc could potentially be doing the next yen, was because this correlation broke. The inverse correlation between the euro dollar and the franc broke. Okay, so until here pretty much until here, these two were doing the opposite of each other, right? Until like over here, they were doing the opposite of each other. And something changed here. Something changed here. What changed here was that the euro franc started moving. So that's the point. You can always pull these charts. By the way, netting 50 pips on the euro yen, we are looking quite a bit higher now. The dollar franc is doing good as well. Euro franc starting to rip. Euro franc starting to rip, and I'm going to cover this now. I'm going to move to the euro franc and then to the Aussie dollar. Is the euro exploding actually? Give me a second. Oh yeah, it is. So I hope you now get my point that we cannot validate shorts until shorts break along. So yes, this is the euro franc. This is a daily chart. We are making some pips, like 70 pips or something. Nothing major. We went long on inverted head and shoulders with a break of a bullish wedge, and we are holding a halfway back long. I think no, yeah, we are holding the next in the series halfway back traditional long with an anchor. Whoops. With an anchor over here with targets at the 1.553s. Now my target is a bit under the 1.27 mark. It is over here. Let me fix it. My target on the euro franc is 1.268. 1.268 is the target on euro franc. We held a larger wonk, which we have spoken about for a while. Now this is a complex fourth wave, as I have outlined, in a wedge. That is pretty much confirmed at this point. So we are now expecting for wave 5 to complete at the 1.268 mark. How did we get this level? This is the halfway back wonk of wave 3. This is the halfway back wonk of wave 3. That is what we held. We held the halfway back wonk of wave 3. I hope this makes sense, by the way. Any questions on the dollar franc or the euro franc? We are in bullish setups on both the dollar franc and the euro franc. and I would need to see confirmation for us to assume that we are not. I'm seeing that Joko is typing. I will go shortly to the toilet. Please ask your questions in the meanwhile. We were. Uh, Guys, give me a second. I just got okay. Okay, guys. Good entry on the Eurofranc. The only good entry on the Eurofranc that you can safely enter is all the way halfway back long, Joko. All the way halfway back long. So just keep drawing halfway back longs or something. Right now, there are no safe entries, in my opinion. Of course, a lot of people will argue some extensions and stuff like that, but in my opinion, we do not have a safe entry right now. The entry was missed. You should have taken the entry with us, to be honest, on that one. The entry was missed. I cannot with good conscience give you an entry wonk here. The only entry wonk that I personally think is safe is all the way halfway back wonk. That's me personally. Steven is talking about the Euro and I'm going to cover this in a second. Now I'm going to the sorry, I'm getting a bit tired of talking. I'm going to the dollar yen. I wasn't able to rest properly during the weekend, so that's why I sound a bit tired. Okay, guys, the dollar yen is holding its next extension long. This extension long has traded 2 or 3 times, once to target, twice to target with small failure, and traded one more time here, maybe a big front run. So this was a valid extension long. This is the entry that I took, and I'm hoping my first target is. Oh, actually, am I looking at the wrong setup? Give me a second. Sorry, guys. No. It is the right setup. I apologize. We held exactly the 61.8 line to the pip. I am riskless on this trade, and my first entry and my first target is the 91.5s. That is the 91.5. That is the first entry on the dollar yen. It is literally in the same situation as the euro yen. We are not expecting any downside as long as we fail this extension long. We cannot make a case for any downside as long as this extension long fails. Is valid, sorry. So until this extension long fails. Very briefly on the OEM, because there is not much more to say. It is bullish above the while above the 90.55 level. 90.55 level. Now I'm going to check the Aussie dollar because I have been especially preparing for that one because I wanted to outline some very important things concerning. Now As I have mentioned several times, I trade patterns a lot. They are my favorite trades, and I look for clusters of Fibonacci's. Now, what you see on your screen is a bullish bat pattern. Now, this bullish bat is nearly perfect in terms of Fibonacci alignment. Maybe not as beautiful as it can get, but nearly perfect in Fibonacci alignment. Now, I like it particularly much because I'm going to take this long with a 12 pip stop loss, which is, like very small of a stop loss. And this entry, the D point gives us, you can see this is point D, the 88.61 at 103.75 is the front run of 4 pips of the all the way halfway back wonk of this rally. All the way halfway back wonk of this rally. From 104.8 to 106 114.8, sorry. So I like this because the BC extension at 2 and 2.24, like very nice Fibonacci cluster, very decent bat pattern, and it's nice with the full halfway back wonk as well. So I'm going to take this wonk with a 12 pip stop loss and look to book this whole position a bit under all the way halfway back short. That is regarding the Aussie dollar. I would like to know if this makes sense. I know that a lot of people were interested in the Aussie dollar, that's why I'm covering it. Now potentially this long entry, if it actually works out, could wait on the euro and could wait on the euro Aussie. Now I just noticed that it has barely missed my entry point. We will see. But I really like it. It was Zen who actually asked me yesterday. He was like, "You have to check if there is a Gartley pattern on the Aussie dollar." And actually, I was very happy to see that there is a very nice Gartley pattern here. It is a nearly perfect backed data lines with a full halfway back long. So if I scale on the hourly chart, and hopefully my chart is not going to get messed up. Actually, it looks pretty good. Okay. I don't know why I'm zooming in so slow. Okay, so when you go to the hourly chart, this halfway back wonk over here, drawn from this Fibonacci here, you can see. Let me just remove. You can see where the halfway back wonk is, right? Aligns exactly at the 88.6 fib where is the valid dip point, because in bets, in bullish bets and the bearish bets and all kind of bets, the dip point has to be 88.6. Now this is something that I urge every single trader out there to do. You should have the 88.6 Fibonacci, and you should look at this Fibonacci level. It is, in my opinion, the most amazing level. I have been surprised how many times this level has proved the support or resistance. It is really absolutely surprising. It is really absolutely amazing, in my opinion, of course. And I particularly like it because in this case, exactly, you can see how exactly the 88.6 fib of the XA leg, this leg, is exactly the full halfway back long. So all I can say is this looks very promising. There is the possibility that we are front running this level over here and that this bat is completed. If it is completed and if it is front running level and it goes to its target, because targets are at the B point, we are just not going to take the next trade. So we are going to remove the entry order. Now, I'm being very conservative because I just don't like the Aussie dollar right now. I mean, I love the pattern, but I don't like the pair. If this occurred in the euro dollar, I would be very excited, but this is occurring in the Aussie dollar, which just looks like, well, okay, I'm not going to say like what right now. So I'm being very conservative. I scaled the entries 10 pips lower. Otherwise, I think we would have gotten filled already. I have scaled the entries back down to all the way halfway back long. And I'm keeping this anchor. But keep in mind this bat. I especially wanted to point it out because this is an ideal bat, guys. Like excluding the C point, which is not ideal, everything else is ideal in this bat. In bats, the most important things are B point should be 38.2% in an ideal bat, or a 50% retracement, never below the 50% retracement. C point should be between 61.8 and 88.6 retracement, is in this case. And the most important part is the D point should be 88.6 of the XA leg. And the other important thing, because this is the BC extension, the 2 BC extension, 2 time BC extension should be somewhere around the D point. Yeah, exactly. 38.2 or 50 or something in between them, yes. This is not a perfect world. This is not a perfect world. And what makes this pattern particularly good, and this is there is a lot of time until the 5th of February. We're looking for only 100 pips here. Um, what is making this bat look particularly good is that the BC extension is aligning. The ideal BC extension is the 2 point, where BC extension is the 2 point BC extension, the 2 times BC extension aligns with the D point, and it is very near that, and we are rejecting exactly from here. I don't know if you can see the BC, the 2 times BC extension is where we are rejecting right now. To be quite frank, this should have been the entry long, and this was the first entry long. However, I didn't take it because I was a bit more conservative, because I don't like how the Aussie looks overall. However, the pattern is near perfect, and to be honest, I think it is a crime not to take it. Especially when the risk is 12 pips, Now I'm going to check the Euro Aussie, and after I check the Euro Aussie, I'm going to give you Alexander to conclude the rest of this webinar. And we are seeing that the euro dollar is attempting to grind two new highs, 8% earlier. Alexander is going to cover GBP USD. Now, I don't know if the Aussie looks like shit, but the looks like shit for sure. Now, I'm going to the daily time frame. On the daily time frame, the euro is about to confirm a large inverted head and shoulders. This large inverted head and shoulders has targets at the 1.4 mark. And there is also one thing I really want to point out when it comes to the euro Aussie, is that this is a three-wave correction. This is a three-wave correction of this whole downside. We have not seen large three-wave corrections before, at least not as large as this one. The largest three-wave correction we saw was 1,300 pips, and this one is going to be nearly 3,000 pips. So this could be. We'll see if this is a reversal at this point. The only thing that I'm seeing at this point is very decent three-wave correction. This was a wave B in a triangle. This here, which actually explains why the Euro Aussie was so awkward, because this was a triangle, a wedge, however you want to view it. This was a triangle or wedge, and this was a triangle or wedge, and now we are blowing higher with this inverted head and shoulders, which would give us let me just check. Sorry, wave. If this was wave A was 1,300 pips, and if this is here the start of over here the start of wave C is going to be 1,500 pips. Now if I take the extension, now I do this very often, I check where I like to do these things. and then I go like from where this starts. So the inverted head and shoulder target is at A equals C. A equals C is the target of the inverted head and shoulders, and just a bit above us is going to be the 1.272 extension of C equals 1.272 times A. Now, why do I like this, and why do I think the Euros is going to go there? I like it because this is the next in the series shorts. The extension short, which we held several times, we held this extension short several times to target, and so on in the past, has its 68-point line at the target of these inverted head and shoulders. So I like it. I think that in the worst case scenario, we should be going at least 600 pips higher from here in the Euro Aussie. Now, what I'm looking at in the Euro Aussie, now that it has pretty much confirmed this inverted head and shoulders, is a retest of the neckline. Now, this retest of the neckline, I don't know what level it is going to be. I'm guessing it is going to be all the way halfway back long, or some sort of awkward extension long, but I am going to be buying the 1.275 level. The 1.275 level is what I'm going to be buying. Now, on the 50-minute time frame, we are in a series of extension longs. As Steven already pointed out, I didn't see the entry that it gave in the morning because, to be quite frank, I was preoccupied with the yen crosses. I see that we are holding a very decent extension long that traded, in my opinion, once to target, twice to target. This is a front run here, and now we are going for 3 times to target. So we are holding an extension long with anchor 1.284, well, 1.2838. So until this series of extension longs fails, we are not anticipating a larger pullback in the Euro Aussie. When we fail this extension long, we can anticipate all the way halfway back long upon breaking the shorts. I think we never traded halfway back long. So I would be looking to buy a halfway back long of this full rally, which should align, or actually the halfway back long of this rally aligns with exactly the neckline. So I'm looking to buy this halfway back long or something like that, which, if my trade on the Euro Aussie on the Aussie dollar turns out correct, could happen very soon. Okay, guys, thank you for listening to my stuff for over an hour. I am a bit tired. I'm sorry if today's webinar was not on par with the previous two. We had a lot of work on the site and so on over the weekend, and I wasn't able to sleep properly and stuff like that due to work. Hopefully tomorrow I'm going to be in my best condition. Now I'm giving you Alexander, who is going to cover all the stuff that he wants, and if you have any questions, even concerning what I have said, you can ask me and I can cover them later. You can ask Alexander and he can answer for me. Thank you very much for attending. Alexander, feel free to take it from here. Please just mute me.
Okay, guys, I think you can hear me. Welcome for me. Glad to have you in the room. George talked so much that I don't know what to cover. For sure, we're gonna cover the pound and gold. You should be seeing on your screens. George, can I just have a look if the video is okay? Yeah, it's okay. What you're seeing on your screens, this is TOS software, by the way, amazing charting. What you're seeing on your screens is a 15-year daily chart of the pound. I just wanted to, because we've been talking a lot about this thing, and I just wanted to emphasize basically what we held. What's been going on in the pound since 2008 after the crash is that we've been holding this massive short extension within the pound. As you can see, we've tested multiple times. and we've failed a lot of long setups to the downside. If we zoom in here, we will be able to see the fact that once again this massive resistance level over here, I don't know if you can see it properly, at the 16432s approximately, has given us proper resistance, and we're again trading to the downside. What is concerning for the pound right now is that we have broken all the way halfway back long. Let me just get a Fibonacci. Actually, we have not broken it yet, but we have dipped into it. We're still in shorts on the 15-minute. I'll just go to multi-charts in a bit, so I can show you properly how the series looks on a 15-minute time frame. This is basically what we have on a daily graph, on a pretty big one. So as you can see right now, we showed some participation on the long on Friday, and maybe gave us a hint that at least it's gonna try and go for a full halfway back short from here, but for now nothing like that. Okay, let's get rid of this. This is a pretty scaled back 15-minute chart of the pound. Basically it's the same thing. It's the halfway back level that I showed you on TOS. If we zoom in, what we'll be able to see is the first time we held the halfway back short and what gave us an idea that we were going to go down was this. It was a traditional drawn from the 1638, 14 approximately, to this low at the 5989. We held it almost perfectly, even we front run it a bit. After that, we had a series of traditionals going down. I don't want to repeat myself a lot because we've been covering this a lot in this room. Basically, if we zoom in a bit more, what we have trading right now and what has been trading for the last week in the pound is an extension short drawn from the 1595. On users on other price data can make a case that that this is drawn from 15945, but it's all the same right now because it's holding. So what we had first was this, held perfectly over here, got tested twice. After that, went to target. After that, you drop basically your extension again. As you can see, again, it went to target. What we were anticipating on Friday was when we got this anchor, basically when we reached target, we were anticipating that the halfway back long will give us some participation, and we would at least trade into the 158554, which we placed as an entry in our morning briefing regarding a short position in the pound. However, we did not get that. Pound was pretty much offered heavily. What we established trading, and this is purely an observation, is halfway back in the morning in the chat deck. I don't know if you remember what I told you or if you understood what I was talking about. This is what happened. It tested twice. Basically got front run, made shorts riskless the first time, then it retested properly, maybe got all the shorts filled. Everybody at that time was maybe comfortable going into a short, and after that we traded. Right now we're to target. It will be interesting to see what's going to happen in the Aussie, in the pound, I'm sorry. So what we would normally expect is to get a proper halfway back. at least at the 1576. I don't know if you can guys see it properly over here. Maybe a short entry, or we might even get a larger retracement, one that we're gonna break support and actually confirm this decline. What would happen if we broke this line over here, the 1.56, is that probably the pound would get a artificial bid and covering of short positions basically, and would trade to a full halfway back short. But we'll see. I don't want to act like the person that has the crystal ball. So let's just track the pound and maybe get some entries today. I just want to emphasize that today is a Monday, so whatever you get as a setup, you might get it tomorrow in the morning also. That's what normally happens. Basically, on Mondays, if the movement is not very aggressive, you would have the same entry on Tuesday, because Tuesday is the first high participation day, and basically on Monday is just an observation day, at least for me. George loves trading on Mondays. He says that all his trend lines have proper support. Then I don't know about that. It's his way of trading. Me personally, I prefer having a look what's going on, and after that going into a position on Tuesdays. Okay, okay, guys, do you have any questions regarding the pound? Do you want me to emphasize on something more, or was that enough? Okay, Marcel, I'm waiting for you, buddy. Waiting for your question. Any long-term view about this GBP triangle? Which one, Marcin? The big one on the daily chart? Which I don't think it's a triangle at this point. It's a very big wedge, big old wedge, if you ask me. Well, no. I trade on basically on price. The moment I see a break, I told you also in the email when you asked me about S&P, what were my views. I don't think that 2008 is going to repeat itself so soon. I don't expect sharp moves in the market for the pound. We're going to see probably we're going to break out of, let me just pull up this thing. Probably we're going to first break out of the short. After that, for sure, we're going to get an entry. So everything in the market is a process. It's not you know, happening at the moment you think it's going to happen. So yeah, you should wait for it. The thing is that just get prepared. You know, wait for the proper moment to get into a position. And price is going to tell you what's going to happen. Just make your analysis, and the right moment will come once you're prepared. Okay, any questions on cable? Guys, come on. I know that you guys have not been asking a lot of questions, which is a bit... Yeah, Steven, yeah. What Steven said, never chase the market, you always get another entry. The moment you start chasing is the moment you lose your cash. I've learned this the hard way. Okay, guys, sorry, I'm just waiting for Marcin to finish typing. With the downside break, right now the downside that we're having, everything can happen, to be honest. I don't wanna talk such long-term strategies, because as you saw, for instance, The euro, the moment that everybody said that it's going to trade to, I don't know if you remember the point when we were trading down at the 120 levels. Everybody said that we're going to see the 118s before we see further any upside. But what happened is the moment that everybody gets really bearish, basically they get really extreme. Doesn't matter on which side in the market. Normally the opposite happens. So in this case, is as you can see, the low in our euro dollar, basically in this pair, was the 120. At this point over here, everybody was talking about how the union is going to fall apart, how everything's going to go to hell, how the euro union is going to pull down the US with it, all that bullshit. Obviously that did not happen. And what we have now is a euro dollar going for a maybe 1.4 target or something or other. I don't know. We're gonna see how it develops. Basically the thing that I wanna say is sorry guys, that was my phone. Never look at the market in an extreme way. Always confirm everything by price, one step at a time. Don't get your a mouthful of things to look at, and don't engage yourselves with targets, really big targets. For me, I've been trading for now 3 to 4 years, and I've seen that you first start with, for instance, in the half back strategy, you would start with little retracements, 15-minute measured moves. Once you get those, you can then basically acquaint yourselves with the larger moves, and everything with time it comes. I don't know if I got a little bit carried away, but it's something worth mentioning because besides giving you guys proper entries in the market, we're trying to teach you the strategy. Have an idea of what we're doing, how you would basically, develop yourself as a trader in the future. Okay, Marcin. I'm sorry, but I can't give you an accurate answer regarding that, and I don't like giving opinions on such things. I'm highly conservative in my trading. I always validate everything, look at multiple setups, and wait for price to tell me what's going on. Okay, any more questions on the pound regarding the most recent price retracements that we have? It's pretty much clear. At this point, we're either going to see some sort of a rally of the 61.8% line, or we're going to go straight through it, and after that go into halfway back short. George actually covered a lot of the things that we have going on in the office right now. Let's maybe have a look at gold. Okay, gold. Gold has broken a major support level. Sorry, guys, my chart's backfilling. Gold has broken a major support level at the 1629. This has happened due to a halfway back short drawn from the 1753s approximately. The fact when we broke this major support level was when we traded from the 50% of this short at the 1694. Once we dipped into the 61.8% line, we started a countermeasure move long. I'm not going to go into it because right now it's a fact and it's history. We traded multiple times the resistance at the 1695, 1694 approximately. We started a measured move short from there. And at one point the series got really strange. What we had on the short side starting off this sell-off, which is not too small at all. Was a halfway back traditional at the 1689. The entry was at the 1689. This was drawn from a 1695, the high over here, to the first low we had at the 1683. You could argue from here what basically happened, but for me, it was pretty clear. We had this trading at the 1683. We gave you this entry, pretty sweet entry. You could be riskless from here and everything. And from here, this is where the retracement in gold got a bit funny, not clear, to be honest. We had this massive downside. After that, we traded over here. As you can see, we couldn't properly go away from this level. We couldn't draw a proper retracement. We didn't have proper micros going away from it. Even if we redraw with this level, okay, we can make a case that we traded with basically $1 something front run over here. Right now we're to target. The most recent retracement in gold is also a traditional, also front run. To be honest, that's what's trading for me right now. As you can see, we bounced away from the target perfectly. Which could give us another measured move short. This is normal for gold on a Monday, or this is a price action from Friday. After that, goals and retests on a Monday. Sunday night, Monday evening. Yeah, so this is pretty much it for gold. Do you guys have any questions? We're gonna look for a proper entry. Right now, yeah, something I forgot to mention, I'm sorry, which is very important. Right now, we have sort of a support level which we broke. This was the 1661 support level. It was a halfway back traditional, and if there was anything bullish about gold, which a lot of people said it's a buy over here, we would have at least showed some participation off this level, the 1661 or the 61.8% line. As you can see, this price has dipped into our failure level, the 1653. If we get a sharp move away from here, it's going to just signal us that this retracement was valid to the point where there was minimum participation, and algos considered it, but not anything more from that. I told you guys this is not a limit buy for sure, because we're trading from a larger short, which also traded first. And this is pretty much it for gold. You guys have any questions regarding this? Come on, guys, please. No one asks questions, which is starting to trouble me. I really want you guys to ask questions, because this is the way that you will learn. We have not learned in a different way. We have asked stupid questions, all sorts of questions you cannot imagine. The things that, now when I look back, the things that I've asked, traders. Check out Euro CHF might be trading an extension long. Okay, Jim. Then is that you actually? I keep missing you with that nickname. Euro Swiss, to be honest, not my favorite. Okay, Market Bell. We're gonna see what's gonna happen at the open. Okay, the Euro Swiss. What I have on the Euro Swiss is, yep, I think this is it. What served me as a valid support level in the Euro Swiss is an extension drawn from the 121 to 77 approximately. You might get it by a pip or two differently on your depending on your price data. Then what I think what we're getting right now is a series of traditionals in the in this massively intervened pair. George was talking about something. My opinion is that we're having these two halfway backs trading right now. As you can see, perfect participation over here. We front ran the level by 2 pips, 3. And on the really micro series right now, maybe there was an entry. Maybe it's what you're referring to right now. Yep. This is, I dare say, a valid entry, probably. Having in mind it's a Monday, half size day probably for some of you guys. I don't know. Yeah, this right now is probably a valid entry into the trend. Have in mind right now, George, I don't know if he emphasized that enough, is that right now we have reached all the targets in the euro, and they're not just two. Basically, it's 2 traditionals and 1 extension have reached their targets right now at the 1346. Basically, in the margin between 1346 and 1348. That's a total of 3 very big daily levels that have reached their targets. So I don't know if you see right now the euro has trouble breaking out of its previous heights, typical for a Monday. So this extension long over here, it's a valid entry. Don't get me wrong. You could get riskless off it, but might as well, you might as well get a full stop out. I'm telling you, most of the entries that you see on a Monday, except in pairs where you have intervention, the central bank is intervening, maybe like the Euro JPY, for example, you might get stopped out. We'll see. It's good to see that liquidity is coming back into a pair such as the Euro franc, even though it's pegged. Okay, yeah, that's what Zen was talking about, I presume. And this is what I have regarding Euro CHF. 2 good entries, to be honest. And the really big entry was at the 12348, at least for me. To be honest, not considering a position over here right now. Plenty of other interesting opportunities out there. I mean, if you have to trade the franc, trade it through the dollar. It's gonna get a lot of weakness over there. I don't know. Maybe other, also, I don't know. The Aussie, the Aussie CHF was a trade that we were considering with Simeon in the office. Problem is, Aussie got very weak, and right now you cannot rely properly on it. And for sure, you're gonna get a lot of more upside in USD CHF, for example. Okay, questions. Okay, Zen. I don't look at a lot of channels. Actually, that's Mr. E channel talk bouncing. I don't know what you're referring to be honest. Oh, near USD. Okay, George talked about Euro USD. I don't wanna actually. Let's pull up a chart. I just wanna point to you guys out what basically happened in the euro. Okay, so what we have in the euro is consecutive longs getting filled. That's not what I need. It's a Fibonacci retracement. As you can see, first halfway back over here, second halfway back, targets filled, and also the target of the extension also aligns with the target of the last halfway back. So you have, what you have is 1, 2 traditionals and 1 extension getting targets filled. I'm not saying that this thing is not going to go up from here. The problem is that it might need a little bit of retracement before it goes up any further. Let me just pull up in multi-charts. I'm sorry, guys, that I'm switching between TOS and multi-charts. Problem is that I'm more acquainted with multi-charts. It's easier for me to chart. Okay, so what we have over here is the extension. One of the extensions which took us to target. It's debatable. This one traded to the front run of 5 pips the first time. As you can see, it traded perfectly to the target. That's why I'm considering this one. Right now, regarding our system, what you would do is drag same anchor, new high. So yeah, it gives you a bit of a downside to the 132. I don't know. I am considering this absolutely valid. If we trade to the downside, that's the support I would expect us having. Other support level we should be aware of is this extension, which would give us basically an entry into the trend at the 133.096. Having in mind that right now the euro is extremely bullish, and all euro pairs, basically it's been slamming everything against it. This is a more an example which is more okay, just 100 pips downside, 100 and how much, 120 pips downside. Yeah, so that's what I just wanted to say about the euro dollar. I don't think George placed enough emphasis on the fact that we've completed a lot of targets. We might as well, just continue an extension. That's what the euro does. Trades 1 traditional, and after that you trade only extensions. So nothing bearish about the euro for us until if it goes below the 132.400 mark. We might consider something bearish about the euro. Until then, unless there's some fundamental reason, Germany goes bust or something, which at the current moment I think is impossible, we're bullish euro. Okay, guys, any questions? Anything? Nothing. I don't see anybody typing. Barnab, okay, bro. I know you have some questions regarding the strategy. Yep. The training webinar will be this weekend. For everyone that is interested in how we trade the halfway back system, which is basically the core of what we do in this office. The thing that has basically brought us to the current level of our trading abilities. We will be doing, I don't know, as long as it takes over the weekend, 1 or 2 hour session regarding how you draw these retracements. George, as I'm mentioning again, covered a lot of things. I don't know what else I could possibly cover. Maybe we can talk about the site a bit for those of you that have not been here before in the room. This is the main page of our site. We've put up a lot of work into this site, so we hope you guys like it. I would just like to point out that the amount of information that you have on this site, taken to price, is just ridiculous. There's tons of information. We still have our trial period going on. The site is free pretty much for everyone. Username is test. Password is test123. You log on. What you get is these three things pop up over here. Charts. If you go to charts, basically here is when we update, when we have a new thing that we're looking at, mostly above 1 hour, 4 hour, and daily charts. Here is where you would find it. For instance, what I read in the morning is George updated his Aussie dollar bullish. What was it, George? Bullish bat pattern. Which gives you an entry also with a halfway back in the Aussie, which is important to know. Yeah, so you get all the updates over here. Basically all the instruments that we cover. If you click on reports, you get the morning and evening briefing over here. Also the recordings of the webinars that we do. This one will be our third. Basically the last 4 webinars over here. You can see them, you can view them, you can watch them again, how we draw our fibs, how we do our Gartley patterns, etc. Also over here you have the last 4 days of morning and evening briefings, as you can see. Okay, if you go to portfolio, if you click on portfolio, you can see the active positions. This is through a site, TradingView. We like it a lot. We post during the trial period. We post over here our positions. After that, it's going to be only for paid subscribers. We have a lot of to teach you guys. Let me just see if I'm missing something. Basically, regarding content, if you click on performance, it's going to load a bit. Loads perfectly. Yep, you can see the performance that we have. This is, I think, from the start of the site, George, right? Or this is for January. Okay, as you can see, we had a very good month up until now. Let's talk about the sign up. Pretty straightforward. Some pictures of what you're getting. Until 7th of February, there's a pretty sweet deal. You get us for $60 for 3 months. After the 7th of February, every month costs basically $30. And after that, from May, single month subscription costs $50, and a 3-month pack, which would normally cost, if you pay by single month, $150, will cost you $90, which is basically a 40% off. Yep. If you guys have any other further questions that you want me to answer, I'm glad to. Marcin, are you still in the chat, buddy? Yeah. Okay. You remember the thing that you asked me about the SPX and my views? I don't know. Was the answer that I gave you via email? Do you find it okay? Do you have any questions regarding that? Because I was not very thorough. Joko will do it on a Saturday for sure, mate. Just to mention. Sunday is my day off. Okay, let's pull up a chart of the S&P. Well, pretty much I told you regarding fundamentals, you should watch what the Fed are doing, because Fed is pretty much determining what the SPX is going to do. One thing you would like to watch also, let's first pull up a chart of the ES, which is pretty much the same as the SPX. It's the E-mini S&P 500 futures. What George is saying, and I'm not happy that I missed it. the ambush long and the Euro JPY just got free. Yep. Okay, doesn't matter. What we've had in the past on the S&P is an extension drawn from here. I don't want to get too much into it. I've covered this a lot. We're going to go through it very thoroughly on the first week of paid subscriptions. What you have is this. Right now we've reached targets. This is not to say that from here we cannot start extensions, you know, small extensions. Let me just zoom in over here. What you've had is basically holding halfway backs, you know. Right now, if I'm not mistaken, we're trading on an extension drawn from here. It was the first time it held, yep, it was over here. I don't know if you can see properly, Marcin. I don't know if you can see how it held over here. Right now, I'm not sure it was this one. Okay, what I'm saying basically is, I told you we're going to cover S&P thoroughly in the first week because it's the best instrument to explain our strategy, because it always goes halfway back. Look for extensions to start failing. You know, once we've reached target, if you get significant downside, which would basically break away from your halfway back that you have over here. For instance, once we break extensions, we're going to have a full halfway back. Imagine this happened today. You're going to have a full halfway back over here at the 1490. Once you break this, as support is the 1119. You have as support the 1119s. I don't want to. We've been talking about this too much. Look for what the Fed does. Look also for other fundamental things that are going on in the market. For instance, what you should look for is, if we bring up a chart of the ZB, which is a 30-year treasury, is the future, I think, if I'm not mistaken. If you have a look at it, our system, by the way, works perfectly over here also. What we've had in ZB is basically on an extension long, trading from here. And after that, what we had is a traditional over here. As you can see, it's been receiving participation the first time. However, shorts have been weighing on it a bit. We've had one to target, and right now we're still holding a traditional. What you would look for to be safe with your shares, Marcin, is maybe bonds breaking down from this level below this price. That will signal you that money is being transferred from the more conservative assets to the more risky ones, basically from bonds to equities. This is purely fundamental, classical fundamental theory. But it's valid nonetheless, don't get me wrong. It just happens on a very large time frame. The other thing which I would advise you, Marcin, is just download TOS software. I think the ticker for this was Dollar Bank, if I'm not mistaken. No, it's not. Maybe it's just bank. Yep, it's just bank. Bank is basically the Nasdaq banking index, which is only financials. And what I told you in your email is that, in my email, is that you should look for the majors. I don't know which banks you own, but the majors pretty much go all together. If you want maybe a detailed analysis regarding, technically speaking, you can ask George to do one for you because he's more acquainted with equities in general. Yeah, that's pretty much it regarding the thing that, like the question you had, Marcin. Yep, NFP is pretty important, Marcin, but the problem is that Doesn't matter what the number is. You're never gonna know what the Fed is thinking. So basically, um, just follow what the Fed says. If they're gonna continue buying bonds, or they're gonna continue printing money, or general things you would normally look for in the market, which are really important. That's what's gonna signal you to get out or stay. Was that the 30-year? The ZB? Yeah, that's the 30-year Treasury bond. T-note, actually, if we have to be technically correct. No problem, Marcin. Okay, guys, I don't think there's pretty much anything more to cover. Thank you for being with us. We covered a lot of things, gave you a lot of things to think about. If you guys have any questions, just ask away, or we might as well start, looking again at the markets. No problem, Notorious. Glad to have you. Have in mind this is going to be free for the next 4 days, if I'm not mistaken. Yep, until the end of the week, basically. The webinars are going to be free. What we're going to do is, because we're a very new site, basically a service, we are going to have Fridays free. The webinar on Friday is going to be free for everyone. Spread it around. If you guys like us, follow us on Twitter. We'll be very grateful for any help. We do this for a living. Okay, guys. Yep. Thank you very much for attending, and we'll see you soon.